Hey everyone, Mark Hart from MIP Capital Partners, together with our CEO and founder, Matt Sinclair, as well as Andrew Glisson. And today we are going to give all of our investors an update on our previous fund, which is MIP Capital Partners Core Plus Fund 2. Now for Fund 2, we acquired these assets in the beginning of 2025, and our business plan was to acquire 20 Class A BTR properties, put long-term tenants in place, and then provide monthly distributions of cash flow. Unfortunately, our performance is already greater than our pro forma, all to the benefit of our investors. The portfolio has exhibited consistent monthly revenue generation, which is largely attributable to above market levels of occupancy being maintained since the stabilization. Our occupancy has averaged at 99.4% since the portfolio was stabilized. And currently, as of today, we are 100% occupied. Now, because we executed our business plan for Fund 2 ahead of schedule, we were able to initiate distributions to investors a month early versus our forecast. And because of that, as of October 2025, Fund 2 has paid 25% more in distributions than was originally forecasted, all to the benefit of investors.
So as Mark mentioned, for Fund 2, we executed our business plan ahead of schedule, which enabled us to initiate distributions to investors a month early versus the forecast. Rental demand was greater than we had forecasted, such that our average lease-up velocity for Fund 2 was 41 days versus our forecast of 60 days. Importantly, we also incurred 39% less interest expense on our aggregation facility than we had budgeted for. And overall, the portfolio appraised for 1.7% above list price. So post-permanent financing and assuming appraised values, limited partners experienced approximately 9% equity value creation relative to their initial equity investment basis. And this is what's depicted in the bottom right chart. And this illustrates a major investment theme around which our business has been designed. We are making our money when we buy, and the timing for this business plan is opportune. We're not reliant on an aggressive forecast to make the math work. We're not reliant upon outsized rent growth assumptions, or we're not reliant upon cap rate compression at all. We're purchasing very high quality houses from best-in-class local home builders in safe suburban markets with favorable demographics, elevated population growth, and strong schools for less than the true value of those houses as measured by various valuation methods. We've developed a rigorous proprietary investment screening process, and we put a lot of work in at the front end before we ever put anything under contract to ensure that we're buying exactly the right houses in the right areas, and that we're making very good deals such that our investors will experience equity value accretion from the outset. And this chart shows that LPs in Fund 2, as of close of the permanent financing in May, were 9% ahead of their initial equity investment basis when we closed the equity raise in March. And again, all this was accomplished without incurring construction or development risk.
Hi, everybody. Fund 2, again, has maintained above market levels of occupancy in the Memphis MSA. These houses are in very high demand, and we're able to attract very high quality tenants to occupy them. We executed permanent financing in May, had all the houses occupied by June the 14th, and from July through now, we've averaged 100% occupancy. So our proprietary investment screening process and our tenant screening process have been designed to attract these high quality tenants that will stay and pay on time.
Now, moving forward, we'll continue to have these quarterly updates available. If anyone in the meantime would like additional information about Fund 2, please feel free to reach out to myself or Matt. You can call, text, or email us. We want to make sure that we will always be available for you as investors. And hey, hope everyone has a great day.